Hello again. It's Larry Steinhouse, and this is the Larry Steinhouse Show. I'm having such a great time this morning. I'm interviewing all these great people. I've got somebody coming up right now, actually, which is kind of a friend, kind of a colleague, kind of a cool guy, actually. So this is Joe Scorese, and Joe is a mortgage banker, a social media guy, which is kind of cool because he understands social media. I don't know anything about social media. You think I should use Facebook, Joe?
Just a little bit.
Yeah.
Just enough.
He calls himself a mortgage problem solver. And really, honestly, I've seen this before with you. And I'll go from here. I've seen this before. I've seen you solve problems on mortgages that most other bankers can't do. And actually, I want to even ask you right away, what's the difference between a mortgage banker and a mortgage broker?
Well, a mortgage broker is one, they don't have bank at the end of their name. Okay, so if you're not a real bank,
if it was that easy, then
it's an independent name. Meaning, I try to simplify it as much as possible. But they're using a third party in their or a correspondence.
Okay,
they might be using a line of money of their own, but they immediately sell to a third party of that mortgage.
And it's a broker.
It's definitely a brokering environment. Sure. A lot of them want to call themselves a banker because they're state licensed, but at the end of the day, they're not a bank. They are selling their paper off directly to other parties, such as like Wells Fargo, M&T, even First Trust Bank. The different people that are correspondents to them. They might have 15 correspondents and then decide after the fact who they're selling it off to based on the type of loan it is.
Okay, so I've noticed before that I have better luck as a real estate investor. I have better luck dealing with bankers than I do with brokers. And maybe it's because I'm impatient. I'm not sure which. But one of the things that I've noticed is that especially if a banker has in-house underwriting, I do better.
Well, it's a relationship. Mm-hmm. Do you already have a relationship, or are you trying to create a relationship with a bank, especially if it has a portfolio component, meaning they're using their own monies toward the investment or the investor? Do you have your deposits with them? There's so varied amount. The smaller the bank, the bigger the relationship. The bigger the bank, the lesser relationship. If you're looking at more of a community bank, you feel like you're still at a credit union / community environment. I think if you go to the big banks, obviously it loses a lot of that, but you're looking to swing a bigger hammer with bigger asset size, meaning like a large multifamily, certain wealth management groups. But I think the comfort level for the real estate professional is more inclined to regional to local banking to build those relationships out.
So why would I go to you?
I'm a great guy.
Well, but besides that, right? But I know a lot of great guys, and I realize you were joking, but I really mean this. I know a lot of great guys, and a lot of great guys in the mortgage business, and I always find that they always overpromise and underdeliver. And I'm not using that for your example because I really don't have an incident for you, but I'm trying to say that people come to me and they say, hey, we can get you a no-doc loan, we can get you a this loan, we can get you that loan, and then you actually give them just even the slightest pieces of information, and they disappoint me. Or they go, oh, well, I don't know how to do that kind of loan. And I'm like, well, why did you say you could? Now I realize that you're not that kind of person, but why does this happen often with bankers, or mortgage bankers, and mortgage brokers?
Well, I think there's not enough due diligence when you're sizing up the loan initially. People like to exaggerate income or assets or values.
I'm worth $100 million. Did you know that?
Yeah, you look at. That shirt is worth at least $100 million. That's like a '60s legendary shirt. I like that.
It's not '60s.
70s.
It's a Robert Graham.
It's like Studio 54.
Nobody knows. Nobody understands Robert Graham shirts.
I appreciate it. I would love to. I hope there's one in 3X, 4X. It'd be very appreciative. Size 20, 34, 35. But there's a lot of preliminary work that needs to be done, and the better the application is taken. In the first 15 minutes, I almost know where the loan's going based on the capabilities of assets and debt to income. I take a more conservative approach. So when things come in, and they come in, how much say in the favor of the client, they're like, wow, how did you know that? So especially when it comes to debt to income, I don't try to max it out and put somebody into an unbankable position. The term bankable or not bankable doesn't sound too good, right?
Right, sure.
Okay,
course, yeah.
So if you're trying to go out and maximize what your financial capabilities are, that loan officer is just doing it to do a loan. I'm doing a loan to get repeat business.
Great.
Okay, so I want to keep somebody fluid and bankable during the process.
So I am so unbankable. It's so difficult for me to get a loan, and I mean this sincerely. It's just a pain in the neck for me to get a loan. I have, it's so easy for somebody who has a job to get a loan. I don't have a job, and then I find that every time I
you look unemployed. I could tell.
I'm totally unemployed. I mean, and I love being unemployed. In fact, my goal is to never be employed again in my entire life.
Well, let me point something else out, and I know we run into these individuals. An individual, I mean, do you have a driver's license?
I do.
Would you be allowed to drive without a driver's license?
I would not.
Okay.
Well, I would, but I could still drive.
Well, you could.
I just wouldn't be allowed.
You would just get a ticket.
Right. If I got caught. Or I'd go to jail if I got caught, right?
Exactly.
Yeah.
So in the case of taking advice from people that create loans in their head and are not licensed in anything regarding lending are dangerous.
Right.
Okay,
So
don't take advice from the Uber driver. Not knocking Uber drivers, but I'm just saying if they're not licensed in banking, or you go to an event and somebody's giving lending advice or suggestions, they're creating loans in people's heads, and expectations go up higher than what's really available for that individual. They don't really know that person's capability, their financial withspan.
I mean, when I sit here and I tell people that they can get a FHA loan with a 580 credit score.
Okay.
Is that okay for me to say? Because
is it
just
possible?
made me feel really bad.
Is it possible? But there's pending circumstances to somebody for a 580 credit score.
Of course.
They got a 580 score
Right.
because of certain reasons,
Right.
and that could disqualify them for an FHA loan. And I'll be honest with you, I'm really not into subprime. Wasn't
I
into it prior to
understand.
08. I really feel if you're at 580, you should just spend the money that you have that you've reserved to buy a home and put it back into your own personal credit to get to a 620. And there's
Right.
still credit opportunities there, thus to then make up for the money that you had to put out to fix your credit. Because think about it, you close with somebody on a 580 score, they can't even get a Home Depot card to fix a wall. So now they're unbankable.
That's well said.
Okay, so you have to look at it. What's their financial capability after they close? Oh, we'll figure it out. No, I'm not going to close that loan on behalf of somebody. I'm not looking to see that as a buyback in the market.
Right. So you're so, okay, which I think is fantastic. And it's funny, we were talking about this earlier. I think Ruth Ann Wood, we were talking about how she picks her clients, and it sounds like you do the same. There's a lot of mortgage brokers out there, or bankers out there that they're new or they don't make a lot of money, and every single deal is important to them. If I'm going to make $3,000 on this deal, I better close it. Where guys like you and guys like me, we don't need that money, and we don't need that hassle. And I like the idea that what you just said was you won't hassle with somebody. You basically say, "Listen, I'm not the mortgage broker for you. I'm not. This loan's probably not for you. In fact, you should probably wait." But you know that everybody wants to move at their own pace, whether it's the right pace or not, and you know how to make sure that they don't get hurt. I like that a lot, by the way.
Well, this is the thing. You get the information back to the individual news, whether it's bad or good. You give them the news as quickly as possible. Eat the frog. Don't delay any phone call or update. Usually I could tell you almost within 15 minutes of putting the application together. But at the end of the day, statistically, somebody that's a professional in their field, meaning lending, is 53 years old till they hit a plateau.
Oh, that's funny. So you're saying don't even deal with anybody who's not 53 or more.
Well, I'm just saying
let me guess. You're 53.
No, I'm 48 and I'm good looking. Still holding it up together. But think about this. You're going to trust somebody that's 28 years old,
right?
That most likely just moved from their parents' home in their basement to entrust you with the most important thing that you're ever doing in buying a home, whether it's your first primary or whether it's an investment property. There's something so special to that individual acquisition. I mean, you've acquired other properties in creative ways. I'm talking about the individual that's never owned anything.
Of course.
And we're not buying a puppy or a bicycle. We're buying a home, and you're taking absolute consideration to all that. Guess what? A 28-year-old is not just going to get it. They haven't made enough mistakes. I have an MBA in mistakes. I don't know about you, but I have an MBA in mistakes.
I have 3 PhDs in mistakes.
Well,
I went bankrupt in 2008,
and you're still going.
Absolutely.
Okay, so you're telling me somebody 28 years old can say, "Yes, I understand what you're going through, Larry."
Well, yeah, but and again, I just want to be careful where we're going with this. I mean, that doesn't mean that they can't get a mortgage for the average person. But what you're doing is you're giving advice to people that's a much higher level, and
all the moving parts to it.
Right,
okay, so it's just a life experience. We have life experience. Whether we
right.
If they cut us open, we'd see the rings around the circles. We just got a few more.
Absolutely. And it's funny. That's what the whole thing. Everything is about today. Everything is about life experiences, about the people who have had different ideas and different concepts that they now teach, or
Yeah.
in this case, counsel people.
How many real estate cycles have you been through?
I've been through, like, I'm going to say 4.
Okay.
Yeah, and only one really hurt me, which was 2008.
Of course, you couldn't even close a door. Might as well.
But I got to be honest with you, I take 100% responsibility for that. My own mistake, again, bankruptcy, but because I knew better. I did know better. I knew that I was signing pieces of paper that was ridiculous. I knew that getting cash back at closings of $50,000 and more from the bank. I'm not talking about from creative deals that we do now, which is very different creative deals. I'm talking about from the bank. No. By the way, I'm going to tell you what I think. What I do now is not illegal. Absolutely not. What I think I did in 2006 and 7 should have been. Yeah. Now it wasn't because it was on the HUD. I mean,
did you have a few pick-a pays? The
sorry?
WAMU pick a pays. Remember those things? We had the option of picking 4 different ways of paying on a mortgage.
Oh, I was.
And guess what? The human did.
The reverse.
The human paid the negative.
Right. Yeah.
We all did
negative amortization.
So they were more upside down than ever before.
In the world would I that was one of those things I never did. I actually had someone try. Mortgage broker banker. I don't remember years ago pitched that to me. I'm like, are you out of your freaking mind? I borrow $100,000 and 10 years later I owe $110,000. And I've been making payments
at 80% LTV.
Yeah, that's insanity.
Yeah.
And they go, oh no, it's a great loan. I'm like, no, it's not. I'm like, I couldn't even believe that was out there.
There was also a different spread provided between loan officer and bank, or loan officer and broker. You made a better yield in specific products, so you would lean more toward a product where you would obviously make a better spread. Okay, even if the person could get a conventional loan, okay, as a first-time home buyer, you would sell them the FHA loan because your spread agreement with the broker or the bank was bigger because there was a bigger spread in FHA loans. Okay, now that it's regulated, you ready for this? It was 70% first-time home buyer in 2008 using FHA. It is now 70% first-time home buyer using conventional loan products.
Funny, wow.
Because now everything's regulated.
Right.
So I don't make any more money and provide any different type of service by providing the correct loan program for the client.
Well, I'm not a big fan of how they regulated commissions. I think I think that's unfair.
Absolutely.
I think it's unnecessary. And how do you do that? How do you say to somebody, you can't get, we're a company and we're not legally allowed to pay you more if you're a better performer. I think it's horrible.
Well, I mean, listen, at the end of the day, if the bank is servicing the loan, they're making their spread over the duration of the loan that you're paying. The loan officer still makes the same.
No, but
but the loan officer commission has been regulated and cut off.
Right, which is not right. Exactly.
I
Basically, what you did was you gave the bank You gave the banks more money, which is what we're trying to avoid doing, right? Or whatever it's. Well, these guys are making too much money, so we're gonna make it so they make less money. No, the bank now makes more money. Bank of America, Wells Fargo, they all make more money, and the bank and the loan officers make less money.
But there is more compliance costs. If you haven't noticed in the past decade, I'm sure you have. There's been a major consolidation of local and regional banks. Re-regionalizing sizes of banks, because if they have too much presence in certain markets, they are forced to assume additional branch business and or deposit business. So there is an additional cost. I don't know what that has done to impact spread, but yes, we are a very regulated market. Yeah. Like when people call me, might have an interest in having me come over. When they give me their numbers, there's no different than where I'm at now, and like so. I have a good thing going, and it's a good cycle. Why would I want to change?
So are no-doc loans coming back?
I mean, they exist.
Yeah. So tell me about a no-doc loan.
It's a low doc. I mean, it's a low. I wouldn't call it a no doc.
Okay.
I mean, there's companies out there that facilitate lower documentation for a loan. We don't do them. Okay. We don't even broker to them. It's not a really relationship that a bank wants to see. They're looking at bank statements. They're looking at credit, and some kind of supposed income that's created on the sheet, and they're taking it based on your credit and bank statements. And I mean, do I think the loan values are lower? I would assume so.
Yeah, I assume so. Sure.
I think the appraisals are a little more restrictive and conservative. I'm sure that lending source is telling the appraiser the things that they want to see and don't want to know about a little more. But I'll give you a great example. There was a bank that did low doc loans, almost up till like not that long ago. M&T bought Hudson City Savings, and for fact, the low doc loans were performing, and they weren't as toxic as they thought they were. It was the other loans that were toxic.
Oh, that's funny.
So what? Because somebody with an 800 score pays their bills.
Well, yeah, for the most part, right?
Yeah.
I mean,
I mean, their
absolutely
LTVs,
right.
their loan to values were lower, but they paid every bill.
Right.
They just don't show a lot of income, or no income for that matter, in their returns. Those weren't the toxic loans that Hudson City Savings had.
That's interesting. Wow. Yeah, I'm finding it difficult. I always find, and we'll talk about it some more because I have a couple of notes coming due, and I've got to refinance out of these notes.
I like candles for you.
And I appreciate it. Actually, we will talk about it because I have, and the LTVs are great. I mean, it's just great. I don't even care if I pull money out or not. It doesn't matter to me. I just
want to refinance and restructure.
Yeah, I want to keep the properties.
Got it.
The properties are really well performing properties.
Yeah.
The problem is, of course, I don't have a job. My income.
I saw you kicking a cup down the street.
Yeah, absolutely. I know.
Panhandling.
I might have to sell my Rolex watch. Stuff like that, right?
Nice.
And the Corvette. I might have to sell the Corvette and the ML 550. Yeah, I mean the SL 550. I mean it cracks me up that that I make more money than I want to borrow. And I can't get loans.
Well, I think the discussion at hand, if you're not looking for cash options, open up a little more. Everybody wants to get more than what they deserve. Like I deserve not to just get back what I bought it for and the rehab I put into. I want more money because I took this class and they told me I can get more money.
Right. Well, it was my class.
Yeah.
They paid me a lot of money for it, and I taught them how to do it. Now I'm only teasing it, but no, we do teach that. So actually, that brings me to an interesting point. So what do you think about real estate education?
My opinion is I think people should have some form of structured background. Listen, I'm a licensed banker. I'm a licensed agent in 2 states.
Right. You're a real estate agent, right?
Well, I have a license in both New Jersey and PA since 1987. I have my banking license since 2001. I have my life and health insurance licenses.
Oh, do you really? Okay.
Yeah, for probably over a decade. I've bought property, sold property. I've worked with multiple services, different types of real estate services. At the end of the day, I think I'm well versed in not saying that I know everything. I'm well versed in referring the right people. I granulate it like a pizza pie and take little slices, and it's all education slices.
So what do you think about the real estate market? I mean, everybody says it's at the top. I totally disagree, but I want to know what you think.
I think we probably have till about 2020 to 2021.
Yeah, I'm doing the same numbers.
Some very punctual facts. The people that lost all their equity in 2008 now have reestablished equity in those homes, somewhere between 30 and 40% potentially.
Yeah, I'm missing out on all these subject to deals I used to get. I don't get them anymore.
Yeah, the inventory shortage, obviously in certain markets, depending on education, location, et cetera, is low still. The rates are higher, but still, when you have a combined income, rates are relative. Okay, I mean you're still under 5% for most programs acquiring and or refinancing a property. So it's still cost benefit there, but like a lot of the conservative. That must have hurt. The more conservative, financial institutions that are out there that are really not as bullish as they should be, are all saying, listen, it's going to catch up with itself. We're going to have a slowdown. It doesn't look like a complete recession because let's be honest. We were in a recession while this market's starting to fly up. We've really been out of the recession for the last 3 or 4 years, maybe 3 years at most. So, I mean, the economy's up. Everything's moving along. Yes, there's a new tax reform plan, but the state of Pennsylvania, it's a very friendly to Pennsylvania, small business and things of that nature. And what's small business? Real estate professional. Okay?
Correct, and I actually agree with you. 2012 was the end of the recession.
Yeah.
So if 2012 was the end of the recession, typical cycle is every 7 years. Then we're probably 2019, 2021 will be it. Now
it'll catch up.
The only thing I'm not seeing is usually right before a crazy cycle or a recession cycle is a lot of for sale signs.
There's not a lot,
and there's not a lot. No. So that's what's making me think it's going to last a little or linger on a little bit longer. The good market's going to linger on a little bit longer.
What you're seeing now on trend, let's just use trend as a great example.
Sure.
You ready?
Absolutely.
A realtor puts a house up on the market, no showings, please, and it's sold in a day because they already have a buyer.
Right.
It's already been done.
That's right.
They're just doing it to get their own recordance of their volume of sales in trend, so it's picked up by the end of the year for other bonuses or opportunities based on sales. So, or caps with some of the real estate offices that are out there.
Yeah, and also just because they think they're supposed to. I find it funny that real estate agents have a certain mindset they don't know, but I don't want to get into
Well, you're a licensed broker. You know how you guys think.
Yeah, no, I know how they think.
Yeah.
I know I don't think that way, but that's
But it is fun to watch. You know what I mean? It's very entertaining.
Absolutely true.
Nobody else is seeing it, just them. You know what I mean?
But what's also interesting on Trend, and Trend, by the way, for those of you who don't know, Trend is the MLS system that we use, the multiple
in this
listing
area
system that we use in this area, right? And matter of fact, it's pretty big right now.
Yeah.
And we can see what's going on. It also talks about how many sales there are, how much inventory there is. There's very, very little inventory, and actually that again makes me think that this great market may continue, because I think people are, like you said, they're finally getting out of their houses. They're finally being able to sell their houses, but they only have $10,000 or $20,000 equity, so they're not going anywhere. They can't buy another house yet. And when it starts to have 100 or 150,000 equity in it, that's when they can buy another house.
Well, I mean, in Philadelphia County alone, you're still under 1%. Like you're like a half to 3/4% of the total houses in Philadelphia that are only for sale. I mean, that means only it's like 3,000 houses out of 650,000 houses.
That's great, yeah.
And we're a capital market by certain circumstances, population, college retainage post-graduation. We match up with a lot of the things, but we're also not really a Class A capital market based on other circumstances. Our waterfront, Camden looks better than Philadelphia right now with all the redevelopment of the commercial.
That's interesting.
Okay,
wow.
So there's still a lot of
room. You mean Camden is finally going to make a comeback?
Well, it is making a comeback commercially.
It's been making a comeback for 25 years.
Well, commercially on the front line, I mean, those buildings are amazing. With American Water took a major presence down there.
Really?
There's a lot of things going on along the coastline now. I mean, people don't typically leave Philadelphia when they live here for whatever reason. They don't drive up anywhere. But if they took a ride to like Weehawken, New Jersey, and just took a look at the New York skyline, and then obviously look at along that waterfront, that's a waterfront to be down here in Philadelphia. We have plenty of land on the waterfront that can be used, whether it's for 55 plus, whether it's for mixed use, whether it's for true multifamily residential, or just a whole mix of it all. There's a lot of play along the coastline, along the waterfront, where it's completely underutilized, and people are now seeing that and coming down here and acquiring and building and investing.
Excellent, excellent. So we got about 2 minutes.
Mm-hmm.
What words of wisdom would you give to somebody, a new real estate investor or somebody who's buying a house? What would you recommend someone do, I don't know, to become bankable to start with?
Well, I mean, sit down with somebody that will be able to put together a game plan for you, whether you meet them through a local RIA, Real Estate Investors Association, a strong referral based on successes. I would start off with a RIA. Invest your money. The $200 for DIG alone is invaluable.
I totally agree.
You're right. That's the first check you run.
Absolutely.
Right.
So if you don't know what DIG is, Diversified Investment Group, what is it, digonline.org.
Yep.
Would be a place to go.
I mean, that's the first place I go. I mean, right there, you start getting a feel of who your power team can be, get personalities, building up that, and then you start really working on your financial resume. It's all about a resume and knowing what your financial capabilities are. I mean, you go onto a lot of these sites, and they're like, hey, I want to buy houses to do this, and this. Can you afford them? Oh, yeah. Somebody told me I'm affordable. No. Do you have a pre-qualification letter stating you can qualify for that loan amount based on your financial conditions?
Even better, I agree with that. But even better, can you mentally afford it? Forget about whether you can afford it, financially. Because I could prove that certain people can afford it financially, but some people can't mentally afford it.
Can you hang a picture? I mean, really, can you
find
the beam? Can you find the beam to hit it and put a screw in it?
That's great. Yeah, you're right. That's great.
Can you mow a lawn?
Yeah, Yeah, can you live without mommy?
There's certain generations that learn everything on YouTube.
Yeah.
I mean, can they like mop a floor? I mean, like there's a basic stuff.
It's
are you ready to put some elbow grease into your ownership?
So, do you have a website that someone can go to?
I mean, if you want to connect with me on Facebook, it's Joseph Scorese, because I'm capped out on the other Joseph Scorese. 5,001. I have a lot of friends. The other Joseph Scorese. You could also go to Joseph Scorese, your mortgage lending specialist, on Facebook. You could reach me at 215-290-5108. Or you could email me simply at jscorese, JSCORESE, at FirstRust, FIRST, one T in the middle, RUST.com.
That's funny, First Rust. That's hysterical. I understand why you do that. That's great.
Yeah.
Very cool. All right, we are out, guys. Thanks so much for listening. Thank you, Joe, for being here.
Thank you, Larry.
Awesome. And we will talk to you again. We'll be back in 5 minutes.